Hello everyone and welcome back. Today we will see that how to find better stocks in the bear market, and let me teach you. I'm going to use the tickers market data for it. This is not a paid promotion, just for educational purpose. Do not buy or sell based on my recommendation. This is just I'm teaching you. Okay, let's go to the 52-week low, and any stock available in this list does not mean that it is cheaper. Okay, it just simply means either its business is not going well, either there are any court cases or any allegations or some mismanagement, or the business model is not good going on there. That's why they are here. Okay, 52-week low. But we need to find the companies that we know, like SBI Life Insurance we all may be knowing, JK Cement we all may be knowing, and let's take that 3 to 4 no companies known, like Symphony makes air coolers, we all know. Okay, we don't know, I guess, any other companies here. So let me see if there are any, then I will take it. Otherwise, let's jump on how to analyze this. Okay, I don't know any. Okay, let's go to how to analyze them. Okay, first of all, check the consolidated statements if available. Not available, it's okay. Its P ratio is very high, way too high. Its market cap is good, enterprise value is also good, no debt, so it's the best thing. Good sales growth of life insurance, but no profit growth, and ROE and ROC is now not also that much good. And FCFF is very positive, so it means that SBI do not have to put more money to get the more customers, right? So yeah, let's move forward. So few positive points as we have seen, like good FCFF and good business, but medium ROE, ROC, and no debt is a positive point. And yeah, let's go on. But P ratio is the highest in the list in its competitors, but not the ROE and ROC. So, and the EV upon EBITDA is also very high, so it means that it is a overvalued stock for now, according to PE ratio and EV EBITDA both. And ROE and ROC are not much good recently as compared to 3 to 5 years. It is similarly, profit growth is not at all good. Sales growth is good. Okay, so maybe the profit may be seen after 1 to 2 years. That also is possible, but the promoters are selling it, so it is a red warning from my side. Let's see the net profit every year. It is not increasing from 2025 each quarter. It has not increased too much. Let's see the yearly thing. Yeah, yearly it is increasing, so not a big thing to worry. It's a big name, as we all know. SBI, very trusted, and but still high PE, and it is currently overvalued, so I believe still it can come a bit lower. So not a buy signal from my side at least. Let's go to the consolidated statements because it is available. 37.5 thousand CR of market cap and 5,000 CR debt is acceptable for such huge company, but still it is a huge debt. Okay, promoter holding is also good, and ROE and ROCE are medium, 15%, not so good, not so bad. Profit growth is good, even though sales growth is very low. FCFF is negative. That means they still have to put the money back into the business to be the part of the competition. And let's see, among its competitors, its P ratio is not highest. It is a good thing, while ROE and ROC are the highest. With respect to Ultratech, Ambuja, and all ACC and Dalmia got big names in the cement industry, so it is a good thing for JK Cement. EV upon EBITDA is also not the highest, so it is not overvalued, while ROE and ROC are good with respect to 3 to 5 years also. CFO upon PAT is more than 1, so it is the best thing, but debt to equity is very very huge, so we can see that factor is a bit negative. Only one time selling, that is also 0.02, and that was also 1 year ago, so not a big red signal here. Just the red signal is the debt here. Let's see the operating profit here. Quarter wise we should not see, ideally we should see yearly it is increasing, and the huge jump came here. We should see why this huge jump came here. Either it is by selling their 1 or 2 factories, or any 1 or 2 big orders, or what is that. Let's see the operating profit improved much in the last 4 years, and let's see the net profit also increased. So yeah, I think the cement is a good going. Just debt is the concern. Everything else is fine, I guess. Let's see the Symphony. We all know that it is a air cooler company and its business main is in summer season. So now the quarterly results will come and they will show the best figures. So the stock prices may go up even if it is at 52-week low, and as we can see, the sales growth and profit growth is very good. Debt is also there, 200 CR, but it is 4,600 crore company, so not much. Promoter holding is also good. ROE and ROCE are way good. Okay, let's see, the FCFF is also good. That means I don't need to put the money back into the business to be in the business. Cash cycle days is also 21, it is good. And let's see, its P ratio is currently not available here. EPS is negative, but ROE and ROCE are very good, and that is also low. So we can say that, see, ROE and ROCE as compared to 3 to 5 years is very good. So I guess the company is progressing well. CFO compared is near to 1, so it is also very good. Debt to equity is low. Promoters are selling, no, promoters are not selling, so it is also good FII balance here. And we should not see the seasonal company's profit as quarterly, we should see the yearly. It is increasing, just one decrease here, so not a huge concern. Let's see the operating profit here at the end. It is very good. Of course they are investing and other stuff is going on, so overall is negative, but we should see the operating profit and it's good. Yeah, so I guess green signal for Czech Cement and Symphony from my side, not to SBI Life Insurance currently. This is just the way I show you that how we can pick stocks in the bear market using the 52-week low sheet. But in the stock market there is a very good and famous saying that never catch a falling knife. So don't simply buy a stock because it is at its 52-week or 104-week low. Just buy it because it is a good business and available at a good price. Thank you.